Hello, welcome to Media Dialogues. I'm Anuradha Sengupta. Consumer goods companies that are at the leading edge of innovation and marketing have always had to make quick pivots to stay ahead of consumer expectations and competitors. Never static, the consumer landscape has altered dramatically in this digital age that's got accelerated in the last couple of years. To understand some of the deep changes taking place in this sector today, I'm talking to Saugata Gupta. He's the Managing Director and CEO of Marico Limited. The company with iconic brands like Parachute, SAFOLA, Nihar and Pure Sense, to name just a few, spans the entire spectrum from food and health to beauty care. Now, it had revenues of over 9,500 crore rupees last year, that's FY22, and has been at the forefront of acquisitions of DTC or direct-to-consumer brands. Saugata,
thank you for having me.
Thank you for being in the studio and on this show. You know, I was reading something in your annual report for the last year, which is FY22, and I'm quoting a bit of that. You said the last couple of years have brought a structural transformation in consumption patterns and shopping behavior. You want to tell us what some of these transformations or changes are?
First, I think even before COVID, what started off was the growth of the D2C brands.
Yeah.
And if you really look at the D2C brands, which initially didn't get covered by some of the retail audits, they slowly took out a lot of share of growth, of opportunity of growth from the traditional players, in the FMCG sector. So if you look at, and obviously e-commerce, modern trade, some of the beauty and cosmetic outlets, specialized food outlets, they drove that change. I think this got accelerated significantly during COVID. And therefore, so that's the first structural change where I think growth opportunities were taken up at the premium end by the D2C brands.
Okay, that's one.
The second change which happened during COVID and again got accelerated to a large extent, if you really look at it, is if you know that the packaged foods, the penetration of packaged foods in India is very low. And what got accelerated in the COVID, especially when people were at home, they were doing a lot of experimentation, they wanted to trust larger, bigger brands, was the adoption of packaged foods. And therefore, especially for in-home consumption, because out-of-home consumption suffered during COVID. Yeah. And therefore, packaged foods growth happened, and especially with respect to health and wellness. The third area where I think there has been growth which happened in India is, if you notice in India, functional foods and nutraceuticals have a low penetration.
Yeah.
And this is one area. I think there's a far more consciousness about health. I think during COVID, the biggest learning for a lot of people was that if you have other conditions, your propensity to suffer is higher. Yeah. And therefore, people have become far more proactive in managing health. And therefore, I see that happening. Lastly, I think the structural change that happened is shopping behavior. I think e-commerce accelerated. And I think digital adoption, whether it's through e-commerce or even, I would say that ordering through WhatsApp with the neighborhood kirana, I think is equally a digital adoption.
Yes.
So I think digital adoption and shopping behavior accelerated. Initially, obviously, a lot of growth of the e-commerce happened at the expense of organized retail. Yeah. I think that has got little changed because organized retail is back and the neighborhood kirana is back.
Yeah.
With a vengeance.
But we are also seeing 10-minute deliveries now of everything under the sun. So in that context, do you see the local grocery, the kirana wala or the local store managing to sustain themselves?
I believe in India, given the size and the fragmented market, I think every segment, whether it's the quick commerce, whether it's e-commerce, will coexist with the traditional kirana. And I must say that the Indian kirana owner is extremely savvy. They know how to run their business, they know how to transform themselves, and we are seeing that transformation happening. And as I said, India is a huge market, and therefore, even 5 years, 10 years down the line, while the share of the channels will change, I believe that the traditional kirana will continue to be a very, very critical part of the entire ecosystem.
How do you see the distribution, the lay of the land and sense of distribution going forward? You said the kiranas will stay. We talked about e-commerce, but how would you see this breakup?
I think the way we look at it is not a one-size-fits-all strategy, but each channel has a role to play.
Yeah.
For example, in Marico, I see e-commerce as a driver of premiumization and innovation.
Right.
And especially also given the fact that it gives us a huge avenue for experimenting with D2C brands.
It's 9% of your revenues now?
That's right,
roughly.
9 to 10%. And we are, I think, leading edge, and we will continue to, I think, acquire D2C brands. I see modern trade similarly a driver of grocery premiumization. I think one of the things that we are also seeing specialty channels like chemist cosmetics, which drives personal care premium. There are specialty food outlets and of course rural. And I believe one area where I think big FMCG players will continue to invest is direct rural distribution. And I think that will be a source of competitive advantage for people, because that drives quality of sales, that drives range selling. Rural aspiration for brands are high. As long as you make it affordable and available, because there is, as you know, there's significant amount of counterfeiting also that happens of FMCG brands. So therefore, I think direct rural distribution will be another avenue of growth. The FMCG story, I think, given the overall penetration of some of the categories in India and the overall, I think it's a very, very long-term story. It's a question of, however, continuing to invest. And of course, invest in technology. Technology is going to play a big part. And as I said, a completely channel-based portfolio and a channel-based strategy. I think that's the biggest shift that has happened.
So, you know, the e-commerce and the premium range of products or brands and the rural distribution, when you look at these two pieces, which are at two ends of the spectrum, what kind of resources are spent behind these two?
For our mass brands, the rural is going to be a big driver of growth. If you see, even in some of our categories we participate, rural market share is slightly lower than urban market share. So we continue to invest behind rural distribution, and as I said, it's just not presence, but I think investment in technology to track efficiency and drive productivity. As far as e-commerce is concerned, obviously the portfolio is completely different. And I think that's the biggest change that has happened, that I think that the differentiation in portfolio, if you look at the kind of people who handles digital brands, they are different mindset, the working model is different. That is why we are almost having two companies coexisting. We call it Engine 1 and Engine 2 in the organization, which handles the organization which handles digital brands. They have a far higher velocity of innovation. They take the philosophy of, think big but start small, scale up fast. They do things, multiple things, while the core business continues to do few things big. But I think the entire philosophy of the operating model is completely different now.
And this is very different from the way FMCG companies would be structured, right? Especially in terms of the sales forces as well, which are pivotal and vital to any FMCG company.
Actually, you are right, but I think our entire segregation has not happened just in the sales force, but even in the entire team. And so
across functions, you're saying?
Across functions, most of the functions. I think if you look at our digital brands, for example, Beardo operates out of Ahmedabad, and we have let them operate out of Just Herbs operates out of Chandigarh. The other brand, which is True Elements, that operates out of Pune and Thane. They don't operate out. We have different sets of people, because I believe the capabilities required to succeed in new age businesses versus the capabilities required to succeed in scale business are completely different in terms of mindset. We have different operating models. The only thing we do obviously is that we look at capital, we look at portfolio, we look at compliance, quality. These are the things we control. But the new age businesses have far better independence to experiment and run on a separate model.
And what about marketing and brand building? Because that is, that is also an FMCG company's big expertise, right? So when it comes to the DTC brands which you've acquired, do you see, what do you see your role, Marico's role in this function?
So obviously, we have certain things which are common. Having said that, as I said, that the capabilities required to run mass brands and large scale brands versus the capabilities that required to run D2C brands are completely different. Having said that, what is happening is there is a lot of healthy learning that is happening from one another. For example, I think what the D2C brands learn is a little bit of processes. They learn some consciousness on cost and managing profitability, because here our D2C brands, which we are there, we invest and our focus is building to last.
Yeah.
We are not onto the valuation
Yeah.
game, but we are intending to have a sustainable, profitable growth over the long term. I think a lot of, I think the biggest thing is speed, agility, digital marketing. These are the capabilities which the core businesses, the core marketing team is learning from the digital brands.
And for these digital first brands, you're planning to reach what, 500 crores in revenues?
Yes, 450 to 500 crores over the next 1 or 2 years. Yeah.
And these are all via these 3 acquisitions that you mentioned.
We also have some organic brands, which is Pure Sense, Coco Soul and Fitify.
You have over the years extended the SAFOLA food portfolio and brought so many healthy categories in. And then I look at True Elements and what they're offering. There seems to be a natural synergy, though of course it's even more specialized. At some point, will it be SAFOLA, True Elements by SAFOLA, SAFOLA True Elements? Does that kind of brand synergy and perhaps even fusion happen at some point, or does that not make any commercial sense?
So right now it's premature because they are True Elements and SAFOLA play 2 different roles in the sense that it operates in a premium niche market.
Yeah.
SAFOLA, in fact, the role of SAFOLA is actually to expand the total addressable market through getting into much more mass categories.
Yes.
So I believe there are 2 different journeys as of now.
You're saying there are 2 different journeys, and also there are pretty definite goals for SAFOLA. I believe the plan is to extend that food portfolio to be worth about 1,000 crore rupees in the next 2 years.
Yeah, around 850 to 1,000
crores. Tell me a
crores.
little bit more about that.
So I think if you really look at SAFOLA started off its journey as a healthy edible oil, good for heart.
With some very iconic advertising. I still remember it.
And then it moved from what I call a therapeutic space to a preventive space. SAFOLA is now a healthy way of living, and SAFOLA is all about things which are better for you. So SAFOLA operates within the 3 spaces, which is immunity. It operates in breakfast and it operates in between meals. And in between meals is the largest market because in between meals anything can be consumed. And therefore anything SAFOLA does is better for you, whether it's purity, whether for example you have launched peanut butter with jaggery instead of sugar. The oodles, instead of maida, we have oats and wheat. So I think SAFOLA offers a better for you option for people, and therefore we will continue to expand, and perhaps in the next 6 months perhaps enter 1 or 2 more categories. And this is the journey. It's I think premature to comment on it, but we will enter definitely into 1 or 2 more categories. And the other thing interesting we are doing is now we are having a dedicated food distribution and a food go-to-market, which we have started in the 5-6 metros, and we're extending it. And that will also drive synergy, and it's going to drive, in terms of acceleration to our food portfolio.
So all of that
and
together.
Tomorrow, True Elements also can get into that go-to-market also.
Right. Saugata, pause for a bit. We're going to take a break. But when we come back, we're going to find out how brand building has got affected because of the digital age. Stay with us.